April 15th is just around the corner, and I'm willing to bet you don't necessarily have all the tax documents required for your tax professional. Tax professionals go back and forth with their clients each and every year asking for basic tax forms that are needed to file their tax return. If you're trying to get a basic understanding of what forms are going to be needed for your tax professional, or you've never filed a tax return before and you want to understand what type of tax forms are being sent your way, this is the exact video for you. I'm going to be breaking down all the tax forms that are required for you to go ahead and file your tax return. My name is Carrington Dennis. I'm a 23-year-old enrolled agent. Welcome back to my channel. Okay, so let's start with the income tax documents, and let's start extremely basic. Let's go with the most common tax form that is issued, and it's issued in the millions year over year. I'm talking about the W-2. The W-2 tax form is something that's issued from your employer, and it summarizes obviously the wages that you've earned that year, along with federal and state withholding. Now, what do I mean by federal and state withholding? These are actual taxes that they were paying in throughout the year to the IRS federally, and then to your actual individual state as well. So the W-2 tax form is going to be the most important one that you definitely want to have ready to go for your tax professional. The next tax form is going to be a 1099 NEC. Now, this typically arrives if you're an independent contractor. Typically, your 1099 NEC is going to be issued by whoever you are doing contracted work with. That could be a certain company, that can be an individual, whoever decided that they wanted to issue you a 1099 NEC, you would be receiving that in the mail as well. Now, let's jump over to retirement income. That tax form is going to be a 1099-R. Any time that you're pulling money out of your 401k, out of an IRA, or if you're receiving retirement pay from, certain pension funds, that is all going to arrive on a 1099 NEC. That is also going to be extremely important that you provide that over to your tax professional, as that is taxable income 9 times out of 10. The next tax form that we potentially want to focus on is going to be 1099 SSA, and that is Social Security income. Any Social Security income or benefits that you're ultimately receiving has the potential to be taxable. Now, not 100% of your Social Security income is going to be taxable, but a certain percentage will be in relation to how much income you're showing on other areas of that tax return. So that is going to be another tax form that you're going to need to provide over to your tax professional if that applies to you. And then last but not least, it's going to be very important that you provide any 1099-G if you received unemployment income. Again, if there was any unemployment income that was received, a 1099-G is going to be something that is issued to you from the state. That is something that you're going to have to go ahead and provide to your tax professional. That pretty much sums up all of the income documents. Now we're going to jump over to the investment documents. Now, there are 3 extremely common investment documents that you're ultimately going to receive. Starting with the most basic one is going to be a 1099 INT, or a 1099 interest income. Typically, you are gaining interest when you have, a good amount of money sitting in the bank, whether it's a high yield savings account or you just have, again, a lump sum amount of money that is sitting in the bank. You are going to receive a 1099 INT, or a 1099 interest income. That is purely just to report any interest that you are receiving from your bank, and it is typically issued from your bank, and that should be something that arrives in the mail. If you didn't receive it in the mail, you can always log into your online banking app and check to see if there's any tax documents that were ultimately issued to you. Staying on that same token, another tax form that falls under the investment income is a 1099-B. This means if you had any type of brokerage account, typically a 1099-B is going to be something that was issued. That can be if you sold any stocks throughout the year, you took any profits. If you purchased stocks but you haven't necessarily sold, you probably won't necessarily receive a 1099-B, but you also might be receiving, and this is the next tax form, a 1099 DIV, which is a 1099 dividend income, right? So typically whenever you're holding stocks issue dividends. Dividends are income. Even if those dividends are reinvested in the stock, it is shown as taxable income in that current year. So your dividend income can be reported on your 1099-B if you have a brokerage account, or it can be reported separately. Regardless, a 1099 dividend income or 1099 DIV also will need to be provided to your tax professional if you are expecting any type of dividend income or you have a brokerage account. 9 times out of 10 is probably going to be reported under your 1099-B, which stands for brokerage. Last but not least, and this is more of a newer tax form that is rolling out, is in relation to cryptocurrency. And I believe this is a 1099-DA. This has to do with cryptocurrency. So any gains or losses, maybe even transfer swaps that are coming in from crypto, typically there is going to be a tax form that is issued for that as well. It's going to kind of look like a 1099-B. It's just going to have a little bit of differences, a little bit more information for your tax professional to go ahead and add to that tax return. But that one is specifically for crypto. So I do know platforms like Coinbase ultimately has started to use that tax form. Again, that is something that just rolled out this year. So it is extremely new. If you haven't heard of it before, if you haven't necessarily checked your Coinbase account to see if there's any tax documents, I highly suggest that as well. Now let's jump over to the deductions. The deductions tax forms are pretty straightforward in my opinion. The most common one is if you own your primary home, typically you're going to receive a 1098 mortgage interest statement. That is to encapsulate any mortgage interest that you're ultimately paying throughout the year. Mortgage interest is deductible on your Schedule A as an itemized deduction. So if you are a homeowner, it is very important that we get your 1098 mortgage interest so we can go ahead and add that interest as a deduction on your tax return. Falling in suit with the interest is also going to be property taxes that you're having to pay for your primary home as well. Property taxes are going to be another thing that is going to be absolutely deductible on your Schedule A. So we would want the property tax statements as well. Now, typically, the property taxes are actually split in between two different statements. You have a portion of the year, and that's typically going to be the last 6 months of the year on one statement and the first 6 months of the year on a second statement. Ideally, if you can provide both statements, that would be great. If you can only provide one, more than likely your tax professional will go with the full amount on that one individual statement. So the next thing that we're ultimately going to need is an overview of any charitable contributions that were made that year. Now that means any contributions that were made to the church, any contributions that were made to other 501c3s, and that is just a crazy fancy way of saying other nonprofits that are recognized by the IRS, or if you did any goodwill. Those are what we refer to as non-cash contributions, right? Non-cash contributions are clothing, selling, not necessarily selling, but contributing potentially even a car, right? Cars for kids, things like that, which are donations that you would have the ability to utilize on your actual tax return. So those are going to be extremely important as well. Last but not least, medical expenses. If you had any medical expenses that you had to come out of pocket for, your tax professional definitely wants to know it because you potentially can have a deduction again on your itemized deductions. Now, typically whenever you have medical expenses, your medical expenses have to be over 7.5% of your AGI. If they are over that threshold, that's when you'll actually start to get some benefit on your tax return, as long as your itemized deductions are outweighing your standard deduction. Now, what exactly is your standard deduction? Again, your standard deduction is something the IRS gives you as more of just a base case, right? If you don't have any itemized deductions, if you don't own a property or anything like that, the IRS will go ahead and just give you the most basic form of a deduction on your tax return, and that's oftentimes referred to as the standard deduction. So as long as your itemized deductions are outweighing your standard, you have the ability to start getting benefit from your itemized deductions. The last tax form that I ultimately want to mention is if you are a student, if you're going to school, you're incurring cost to obviously go to college, pursue higher education, whatever the case may be, you have the ability to receive a tax credit for it. Now, typically a school will go ahead and issue a 1098-T, I believe. That tax form is going to encompass any amounts of money that you were paying for tuition. You also have a 1098E as well that shows interest that you were paying on student loans. So those two tax forms are also going to be extremely, extremely important if you want to claim potential tax credits in relation to obviously the higher education that you are pursuing. That has been a full overview of all the tax documents that are typically required, the most basic tax documents that are typically required for you to go ahead and file your tax return. If you can go ahead and gather all those tax documents and have it ready to go in the bundle for your tax preparer, I promise you, he will, grace you with open arms. He will be in an abundance of happiness. I promise you he will. So if you guys can gather all those tax forms, that'll be great. Provide it over to your tax professional, and then he will go ahead and get that tax return done for you guys. If you guys got any value out of this video, please drop a like, please subscribe. I drop videos like this weekly, just trying to educate you guys on the very basics of tax knowledge. Again, my name is Carrington Dennis. I'm a 23-year-old enrolled agent. Have a great rest of your day. Bye-bye.